Hey, what's going on, guys? My name is Sage, and I'm going to give you the daily recap of what happened here for March 19th. So, just as a preliminary, I've been trading for a little while, and I want to disclose the positions that I took or didn't take, and just some of my thoughts about what price action did. So, everything that I say, remember, this is just my opinion. I will disclose the positions that I've taken, and I'll also talk about the thought process behind why I took a trade, why I didn't take a trade. But before we even discuss indicators or anything that may seem a little bit foreign to you, or maybe you're a newer trader, maybe you started trading yesterday, make sure that risk reward and how much you're willing to lose on each trade is at the forefront of every decision that you make. If you've been trading for 25 years, if you're a Discord member, if you're another trader from another Discord that's here and saying, we're just trying to check this guy out and seeing if he's actually teaching the right thing, that's okay as well. That's perfectly fine. Just make sure that whatever you're going to do in the market, always consider the risks, right? I will start every video like this because it is extremely important. This is where we run into trouble. Let's talk about just price action today. We got a pretty decent bump, right? So on the VIX, I started with the VIX yesterday. I want to bring up the VIX again. This is the VIX off the 4-hour time frame. I have a killer strategy for shorting the VIX when the time is correct, right? I'll probably make a video of that somewhere in the future, but when the VIX jumps above 30, 32, $35, I generally make a killing, an absolute killing shorting the VIX because I understand mean reversion extremely well. All the decisions I make are based off of statistics, and I backtest everything and every decision that I make. So what are we even bringing up the VIX for? The CBOE volatility index, just permit me for 1 second if you have more experience. For some of the newer guys, this is just going to give you a barometer. It's going to give you a sense of how expensive option contracts are for SPY, SPX, right? So there is extremely important relationship there. And we fell off by a lot. The VIX is right now trading at 20. You want the VIX sub 15. So that's when you know, okay, volatility doesn't seem like it's that high. And if we're trading lower on the indexes, might not be a bad idea to start buying. Cool. So let's delineate some of those ideas and those concepts, and let's translate that into actionable and some technical levels. On SPY, we got a decent jump. I got on today and I talked about, hey, might be trading a little bit lower here for FOMC. I thought that there was a disparity there. There was a little bit of a disconnect between what Powell was saying and what monetary policy is going forward versus price action. So in my opinion, I thought that since we're no longer cutting rates and it doesn't look like we're going to be doing that for the next couple months, I thought that price action being more bullish for the day, I didn't necessarily think it was justifiable because the whole point of whatever we've been doing for the last 2, 3, 4 years is to cut interest rates overall. So this way companies can take out their loans. They can do it at relatively low cost overall, and then could go about their business. I've said this before. The small caps probably are going to benefit the most from this. So what I'm doing now is I'm pre-texting a lot of some of the levels and some of the thought process of why I'm probably not buying the dip, at least not yet. Okay, I need you to understand that. I don't want to come on here and just say, hey, it's going to go here, it's going to go there, if I have no justification for that. And if I do decide, or maybe you get a trading idea from us, if you're going to take a trade, make sure that you're not thinking about how much money you can make, but how much money you can lose. That needs to be at the forefront of every decision you make. Cool? I will be very much a stickler when it comes to that because it is the most important thing in trading. 90% of you are going to think, how much money can I make with, my inheritance that I got from grandma and grandpa here, $50,000. Let's put it all on some meme coin and let's see how that goes and not consider a stop loss. That's not what I'm going to be educating you guys on. I'm not that kind of person. So let's go here to the 30-minute time frame. Look at that wick. That wick is huge. Now, what does that tell you in terms of technical analysis? Well, I'm going to tell you. That wick tells you that sellers were pretty much in control because the body of the wick, or at least we're missing a body here, but that overall wick got you all the way up to $587. That might even seem like a mistake. Let's see. So that wick was after hours. Cool. The top of the day, yeah, that wick is ridiculous, by the way. But the top of the price range that we saw was $571.05. So did we see technically a breakout? I think that we were trying to, but not necessarily 100% convinced. So what am I seeing going forward? I said this yesterday, and I'm going to say this today, my opinion. but I don't necessarily think that market is ready here to start buying up. Per the volume overall, this is really important to understand. You got to pay attention to volume, because volume is what moves market, right? When there is an imbalance of volume in one direction or the other, this is where we see dramatic moves to the upside, dramatic moves to the upside. This is just trading 101. There is some volume there on SPY. It looks like the majority of it came towards the end of the day, because when I looked at this about half an hour ago, this was maybe about 60% of this. So was there volume? Not really. Not really for the move that we saw. And remember, we saw some price action move lower. So let's check out SPY once again. Where do I have support? Support is 560. Lower than that, I have support approximately at $554. I use something, as I've shown in yesterday's video, something called the voodoo lines. The voodoo lines, all they are, they're just a fancy indicator that mathematically speaking does the calculations for what support and resistance can be. I would like to share that with you guys. So the voodoo line levels, never mind the smart money concepts indicator here. It's a Lux Algo indicator that you guys have access to. SMC, you can look that under here under indicators, but let's put on the voodoo lines, because that you guys do not have access to. And let's see exactly what they are. So they're doing their calculations. I have to pay a monthly fee for this. Yep, they're constantly being updated. So the magnetized area puts you at about $570. And then you have a tree line area at $565. If you don't know what these are, the important levels are going to be the red levels and the green levels. They're just magnetized areas for either support or resistance. So if we trade back down to, what did I say, 560? 560 is an area of interest. Lower than that, I have the snow line level, 557. And then all the way back down here at 550, that's a fire line level. You might think that this is hocus pocus. I'm not going to disagree with you. Sometimes I look at this and, sometimes I say, am I really going to take a trade off of this pretty little line? I use this in confluence with other factors. It's never just one thing. It's usually a layer or a multitude of things that need to line up with one another. So the levels that I just pointed out, make sure that that's part of your analysis. If we start trading back down into some of these pockets, I'm interested for a risk reward trade to the upside. Let's go here to QQQ. I'm going to do this fairly quick, because yesterday I spent 25 minutes with you guys. I don't want to do too much of that here today. I just want to give you the information so you guys can go about your day. So let's remove this box. Let's get rid of that. And let's look at this on the daily time frame, because that's all over the place. On the daily time frame, we wicked into the tree line area twice. So we got rejection, and look at where the body of that candle is. That is not a good sign. I'm going to give you just a little nugget of information. I'm not an economics person. I'm not an economics professor. I've never studied at Cambridge or any other prestigious university for economics. This is just my opinion. With the market trading up and gold hitting once again its all-time high, I don't perceive this as a good sign. Usually, people are buying into metals when they want to hedge their bets on equities, and vice versa for the bond market. The bond market usually does not have a one-to-one correlating relationship with equities. You're either buying into bonds or you're buying into equities, so you can balance all your asset allocation. This is investing 101. So gold jumping the way that it has been, with equities selling off the way that they have been, makes sense. Now, gold jumping and equities jumping at the same time, to me, doesn't make too much sense. So let's go back to that candle. I wanted to bring that reference there for gold. Let's go back to QQQ. So that body of that candle is a little scary to me. It really is, because the majority of the volume didn't even get above this wick or the body of this candle just 2 days ago. Cool? So who's calling out the bottom 2-3 days ago? I bet a whole bunch of retail traders. Honestly, I don't blame them, because it's been exhausting with all of this downtrend, right? You guys feel it. I feel it for sure, right? If you're following along with me, put it in the comment section. Yeah, Sage, I'm pretty exhausted with this for sure. I'm exhausted as well. So if we trade back down to the fire line, that is my first recommended area just to pay attention. With that, on the shorter time frames, if I'm looking for confluence factors, I'm looking for these areas to once again be some sort of support. We were supporting this area on the fire line. Many of you will point out, Sage, I know what that is. That's an inverse head and shoulders pattern. I've seen videos and I've done webinars with you before. You talk about that all the time. Yeah, absolutely. That's the neckline right there. It's at $480, right? 480, 482. If we break above that level, we might be looking at a nice little recovery, but be careful. Be careful, because the comments from Powell, they were not aggressively bullish. They were not dovish. there were some things there that didn't really substantiate any price action to see any sort of recovery. So I thought that there was some dissonance with price action for today and some of the comments that were made by Powell. Cool. So those are my opinions, right? I'm being more subjective than I am objective. You don't have to follow along with me. You don't even have to agree. These are just comments that I'm making for why I'm still not buying into certain positions. So that's QQQ. I've mentioned yesterday, I'll mention this again. I'm interested in something called TECL. Do your homework on this. Make sure that you understand what it is that I'm recommending and why I would even mention this to someone like you guys, right? If you're another trader and if you're here to criticize me and say, no, this guy is an idiot and doesn't know what he's doing, or this guy doesn't really invest, he doesn't actually have money in the market, that's fine. That's totally fine. But at least consider, right? You can be dissuaded from 90% of the information that I'm going to give you, but at least consider risk reward, right? That's just the one thing that I want you guys always to have in the back of your mind. I'm looking to buy into TECL if we retrace back to 62.50, provided we have confirmation, and then incrementally I have back down to 58.50 and then all the way back down to 54. In my example yesterday, I did talk about risk reward all the way back down to 42. More than likely, we're not going to see 42, right? I think the market is going to be picking somewhere in this range. It's a wide range. Yeah, it's a very wide range, but I digress. Cool. So TECL would be my poison of choice. Next would be TNA. I made a huge case of why I think that small caps are going to benefit when we finally do start cutting interest rates. Be mindful of one thing. I'm going to impart to you some experience from, I've been part of these cycles for many years now. We will not be jumping with price action on the first interest rate cut, so to speak, that is to come. It's going to be front run because the expectation always, the market is always looking 6 to 8 months in the future. Always. So this is why it's always like high tension. What's going to happen in 3 months? And let's buy in early so we get the best risk reward. That's what the market is all about. That's why you're here. That's why I'm here, because I want to be part of that as well. If we trade back down to like $30.50, I think the risk reward is already going to be worth it. So what is the drawdown that you might perceive if we get back down here? The drawdown is going to be 20%. I don't know about you, but if I buy into shares on something and I draw down 20%, I might look to add to the position. Okay, so that's what I'm thinking about TNA. I'm not in any TNA positions quite yet. I did take an Amazon position. I'll talk about that here in a second, but this is what I'm thinking about on TNA. Next, I wanted to talk about chat. I bought into this ETF. I'm going to mention this a few times. I'm mentioning this to my guys. I think that this chat ETF is going to be hitting $70, $80, $90 in the next 3 to 5 years. You don't need to believe me after time goes by if I'm not, if I'm not taken off the face of the earth in the next 3 to 5 years, God bless. We'll see. I'll look back on these videos and I'll smile down saying, I think I was right on these positions. So on chat, this is a generative AI ETF. Some of you guys don't even know this, but ETFs have not been around forever. They've been around when I was born. When I was born, SPY and QQQ, they were coming of age. So I think that we are at the genesis of what the possibilities can be on this generative AI ETF. I'm looking not 6 to 8 months in the future. I'm looking 3 to 5 years. Cool. So we'll leave it at that. Next, what I would like to talk about is Amazon. So Amazon for me is where you bet big. You bet big on Amazon. You bet very, very big because it's the company to bet big on. Are you going to see astronomical returns like you would in the crypto space? No. If you're a crypto person, crypto bro, crypto sis, there's no shade. I'm not throwing any shade on you whatsoever. I just want to say that if you're going after the astronomical returns, that's okay. You do you. But I'm looking to put some real capital behind Amazon, which I've done today. And I'm looking for either here to be some support, exactly here, either back down here to be some support, and then I'm looking for back down there. So that's speaking, right? If I'm going to share with you what position that I took. I took it on AMZU. I'm very well known for doing my leverage shares positions. I do these all the time. These would be my incremental areas. So I'm thinking if I get stopped out here, that's okay. I'll risk 3-5% on the trade. That's fine. But what is my perceived drawdown? What is my risk per what my reward can be? My risk overall, I would say, would be 20% drawdown if I decide to hold on to position. What would be my reward if I decide to hold onto the position and it starts moving in my favor from here? I'm going to be realistic and I'm going to say it's at least 28%. So, 30% to a 20% drawdown. But what would I do if I trade all the way back down to, let's say, $25? I wouldn't let go of the position. I would do a I would do a crypto bro thing, and I would double down, or I would leverage into the position for sure. So that's what I'm thinking about doing on Amazon. Again, no shade to my crypto people. I mean, power to you. You do your thing. But for someone that's been doing this a little bit longer, please consider setting your stop losses. Don't be just the person that says, hold forever and don't consider exactly where you can average in or where you can cut, and then just wait for your position to get to a more desirable level and then go from there. That's all I'm going to say. Cool. You do you, but that's all I'm going to say. So Amazon, obviously, I'm very interested in Amazon. Cool. And then the last thing that I'm going to bring up, which would be, this is going to be the dawn of today's presentation, would be Tesla. So I took TSLL. This is a leverage shares position on Tesla. I did buy into this at $8.50 way back when, right? Way back several moons ago. And I rode that up to $16. That's what I did. I caught a nice rally onto this. I did not catch this rally. I honestly, I could not see this rally. It came out of nowhere, but there might be something here. So I was stopped out on this trade, but I will get back in. I probably will get back in as soon as I start seeing signs of price action a little bit more in my favor. So I got that stopped out. I got in at $7.50, $7.55. Is it a huge reward? No. But I also don't want to risk a pullback and a break of structure lower. If on Tesla, if we break right here, there is a likelihood. Please do not be this person. If you decide to follow me long term, do not be the person that says there's no way that we're going to be breaking below $220, because, when we were trading all the way up here at 330, there are so many people saying there's no way we're going to break below 330. And look where we are. We're $100 below that. So don't be that person. Please do not be that person. I say these all the time. So on that daily time frame, homie, I mean, consider the $200 level. First off, I think $200 is a reasonable target. And then from there, you should consider 190. I'm going to be considering those levels as well. So 200 and 190, then we'll see if we buy into the positions. If I start seeing that price action right here is constituting signs of reversal, I'll get back in. No problem. But for right now, I was stopped out on my trade. So cool. I gave you guys the rundown on certain positions that I saw for the day. I do want to conclude that for tomorrow, I might be looking for some trades tomorrow on NQ because I'm trading futures now. I'm going to share with you some levels. You're more than likely going to see me talk about this tomorrow in the afternoon because I'm going to be doing these videos on a very consistent basis. So on NQ, 5-minute time frame, just taking into consideration some of the levels that we have. I'm looking at NQ. Permit me just a second. Going to get rid of that. And that is going to be my first area, or for you SMC guys, you can look at that as an order block. That is a strong low for me. That is a definitely strong low. So I'm looking at the 700 area for NQ overall. And off of the 1 hour time frame, that's what I'm looking at right there. So the breakout points where we saw, we saw a head fake here. We saw a head fake here. We saw one breakout. There's probably going to be buyers around this area that are setting their stop losses just a little bit lower. So if we go for a liquidity grab lower, I'm looking for longs at that point. If we do start selling off on NQ, I don't know if we will. And then on SPY, off of the 30-minute time frame, just as preparation for tomorrow, because right after I make this video, I'm going to be doing analysis. So I'm prepared for tomorrow, right? I want to trade. Of course, I want to day trade. I'm going to be looking for 560, so about a $6 to $7 sell-off. And then I'm going to see if buyers are going to either hold that area because their stop losses are going to be set just a tiny little bit lower than that. If we go for a grab, that grab is going to be 558. I'm just guessing here. It's literally just a guess. And then lower than that, I'm looking for approximately 555. If we start jumping, my Amazon position will be popping. I have some other swing positions that are doing okay, right? If we rally more than here, then yeah, we will benefit from it. But right now, I'm not necessarily buying the dips, so to speak, okay? I would caution you from doing so as well, depending on where you are, what account size you have. These are considerations that you need to make, but be careful. Be careful with the environment. As I'm looking at Delta Flow, as I'm looking at specifically what came in for dark pool data, what came in for options, I'll conclude with this. what the option market was pricing in. I got calls on Tesla. I got calls on Amazon, a lot of them. I got a crap ton of calls on Tesla. But overall, there's still quite a bit of shorts coming in on SPX. All right. So cool. If you can, comment down below. Just let me know, Sage, I'm getting something out of this. I understand the levels, but I'm also seeing how it is that you're thinking about things. I'm really appreciative of the fact that you put risk reward at the forefront, because it's the most important thing. If you're following a trader and that person is not considering the risks first, right? That's why it's called risk reward. You got to be careful. You got to be careful. You guys work very hard for your capital, very hard for your money. So consider the risks before you go aping into any position that you don't necessarily understand. I look forward to reading your guys' comments, and I'll see you guys tomorrow.